Hello and welcome to another edition of the Forex Technical Market Update for Wednesday, July 15, 2015. Okay, in front of us we have a chart of the Canadian dollar versus the US dollar. And with this market, when the market is rising as it is, it means that the US dollar is strengthening versus the Canadian dollar. So what we have is a clear uptrend. The market broke out of a consolidation pattern, and we were having some stalling out at the all highs or near the all highs. And this morning, the market is punching above the old high, as you can see by this candle. Now, this high is not broken definitively until this candle has closed above this old high. So we should wait for our close to say, okay, that this area of resistance is definitely cleared out. But the USD Canadian dollar is fairly bullish, and the market has been in an uptrend for just over 2 years now, and the uptrend is continuing. Now, support in this market will be, let's go down to the 4-hour chart. We should get to see some support at 128.50 down to 128.20. That's an old breakout point, and resistance is at the monthly pivot point number so far. And the next pivot point up, monthly pivot point up, is at monthly R3, which is at 129.92. As you can see, the market has blown above the R1 and the R2, and it's approaching the R3 at 129.92. So we should see, or we could see, some stalling out there. Taking a look at the weekly chart, let's look for any area of resistance up on the weekly chart. And as you can see, we're coming up to a swing high that was made all the way back in 2009. And that's why it's good to look at these longer term charts for longer term support and resistance areas. So if we draw a red line above that high is at 130.64. We see that the market, let's go back to the daily chart, we see that the market has some way to go before it hits at 130.64, and that could prove to be fairly strong resistance in the Canadian dollar, because looking back in 2008, 2009, we see we had a spike up here. The market got rejected, came down. Another spike up here, that's 2. Market came back down. Another spike, 3. Another spike up, 4, and the market was rejected. So obviously this 130 area is very strong resistance in this USD Canadian dollar pair, and it should be respected, because we did have some turnaround situations up at that level. Okay, let's take a look at the USD Japanese yen. We said that the market pulled back and is continuing its rally. And where did the market pull back? We called this trade earlier last week, where we said that the market was bouncing out of the monthly pivot point resistance area. The market bounced out of the monthly S1. I had said last week that what could happen was that the market could come down as far as the monthly S2, which was at 119.48, but the market didn't reach that area. It stalled out near between the monthly S2 and the monthly S1, and we have seen a rally so far. Now, resistance will be at the monthly R1, which is at 124.84. That's some medium-term resistance, along with these swing highs up at the 124.50. We have some swing highs here. These areas could act as resistance in the market, in this USD Japanese yen. Another market that is doing very well, and we continue the theme, is this British pound versus the Japanese yen. And the market came down to the 50% retracement, Fibonacci retracement level, and has bounced significantly. Now, the British pound pairs often go or will retrace further than the 50% retracement level. It could go to the 618 or the 786. But in this case, the market went to the 50% retracement and is heading back up, and that shows some strength in these British pound pairs. And the theme of this year so far has been the relative strength of the US dollar and the relative strength of the British pound, because the British pound has been doing relatively well, against the major currency pairs, and that is a major trend that is happening in the markets, and that's why we should be taking positioning our portfolio to take advantage of these moves in the British pound. For example, the euro versus the British pound is coming up on a low for the year. The low on the year was made in March, and we see that the market is, after some retracement, is coming back to test that low again. The British pound Australian dollar is approaching the high of the year and actually is making new highs for the year, and this is a trade that we spoke about earlier in the year out of this consolidation pattern. And the market has rallied some 193, over 1,000 pips from when we mentioned that this could be a good trade setup, and this market continues to rally. Taking a look at the British pound versus the Canadian dollar, making a new high again today. This is a very strong trend that is happening here in the markets. So the relative strength of the British pound is prevalent in the market. Now let's take a look at the British pound versus the US dollar, and the market is just slightly down on the day so far, while the euro versus the US dollar is down pretty significantly. Well, it's coming back slightly now, but it was down. The low that was made was 109.34, and it's now at 109.62. So there's some rebounding in that market. Okay, so the best way to be trading and to be making money in these markets is riding the prevailing trend. Don't try and fight the trend. Just ride the prevailing trend. If you would like to start riding these trends in the markets and start to receive our premium signals, you can click on the link below this video. And just a word on these signals. These signals are for growth in your account. They are not for get rich quick profits in your account. They're a steady way for you to sustainably grow a trading account or an investing account. And most of our clients, we want to stay for the long run. So it's not just something that, okay, you will be in 1 month and then you'll be out. It's something that I am expecting you to stay for a while, because you will see that it's beneficial to stay in the long term. So click on the link below this video to get started with the signals, and thank you very much for listening. I'll see you again tomorrow.